What is a good earnings per share when investing? Benjamin Graham recommended investing in companies with a PE ratio less than 25. It was something that he enjoyed investing in. At that time, equities weren't an attractive investment and they just were oversold, or people weren't buying them. So it was really easy to buy a company with 20, 25 PE ratios. And at that time, interest rates might have been at 5, 10%. Earnings yield, which is the inverse of a PE ratio, tells you that the 25 ratio provides a 4% yield, right? It's inverse by 1, and 1 divided by 25. If you invest in a company that has a lower PE ratio, indicates that it has a higher earnings yield, right? So PE ratio of 10 will have a 10% earnings yield, and if you go lower on the ratio, higher yields. Today we have lower interest rates, which provides a lower discount. So it provides maybe inflated earnings in some cases, or inflated valuations. But either way, you have to look at more metrics than just the PE ratio. It's important to look at the earnings to figure out if the company's making money or not. But it's also easy to distort earnings on quarter to quarter, maybe year over year. So if they have a sustainable earnings model, they're very profitable over 10, 20, 30 years, that's a good indication. And if they have a very stable PE ratio over that period as well, that's great, because the market's pricing it in. If it's very high, 100 PE ratio, that indicates that it's producing 1% earnings yield, and it's just overvalued in some metrics. But it's important to look at other metrics to determine its financial scenario, who the investors are, whether the company has a good product cycle, whether it's a short product cycle or long, will determine when it makes earnings, whether it's seasonal or not. Those are all things that you need to account for, and you can't just look at one. You have to look at a dozen, and then you have to make a decision based on qualitative and quantitative metrics. And earnings per share PE ratio is a good place to start for any new investor.